Hey, what's up, fam? It's time for another earnings review. We've got Snowflake, that's a data lake and a data warehouse company, coming up for earnings tomorrow after close. They're a company that's based out of Bozeman, Montana. So we'll look at the financial strength of the company, technical indicators of the stock price, what's been going around in the company and in the competitive landscape, look at a SWOT analysis, and in the end, wrap it up with a money score to help us understand what one should do with the stock buy, sell, or hold. So I'll see you guys in the following section. All right, guys. So, what does Snowflake actually do, and what is a data lake and a data warehouse? A data lake versus a data warehouse are two separate things. They are sort of interconnected. But data warehouse is essentially structured data being consumed by extract, transform, load practices. So what ETL stands for. That's then pushed into this thing called a warehouse, and then analytics and insights are run off of it. That's a data warehouse. A data lake is a little bit more complex than that, in that it takes structured on top of semi-structured and unstructured data as being displayed by this YouTube icon and an audio file icon and probably flat files and stuff like that. The use case for a data warehouse on the left hand side is probably analytics, finance, operations teams, um, portions of the data science team, perhaps. The use case for data lake or the users for data lake are probably those on top of that engineers and definitely heavy, more senior data scientists and people of that nature, and where machine learning and those use cases are more compatible with data lake than data warehouses. That's basically what Snowflake does. And in terms of the company itself, they're founded in Bozeman, went public in Q3 of 2020 in September. They go by usage model. So instead of a subscription model, they charge as you go, pay as you go, like your AT&T bill or T-Mobile bill. They have a new CEO that'll release earnings for the second time. He's ex Google, and they were market cap of less than 50 billion, about 7,000 in headcount. So we'll dive into the financials in the next section. So from a financial standpoint, the company is growing in a at a pretty good clip on a revenue perspective, 33% year on year. Their gross margin, if I do a 544 divided by 828, that seems very low for a software company. That's 65%, 68%. That seems very low, and we can actually check that. So if we go into statistics and I go into gross margin, 65, and it's never really improved. So that to me is a low light. Their operating expenses look really, really high. So that's 893 on 828, which is more than 100%, and they're basically bleeding on a net income basis. In not even before you get a net income on an operating income perspective. So the other on the income statement bit, they also do have this tendency. If I go into cash flow, I like to look at the cash flow, and I go into the quarterly statement, and I go into the cash flow from continuing operations here. And what I look at is the stock-based compensation expense. That's 331K over this number of 800 and expense of 893. So 30% of their expenses are related to RSUs that company employees and executives are getting. That's an astonishingly high number. And should it cause more share dilution in the future? Question mark. So I decided to check those things. And if I go into their in that one, now that we're clear on the income statement bit, I decided to look at the benchmark Snowflake versus the four other competitors in the software applications and the infrastructure space. So Cloudflare, Datadog, ServiceNow, and Salesforce. Salesforce is relatively multiples larger than any of these guys. So that they could be an outlier, but I see gross margin as a low light for Snowflake. So yellow indicates the lowest in this in their benchmark category. Um, on the revenue per headcount basis as well, although net is lower than Snowflake, Snowflake's got a big mountain to climb versus ServiceNow or Datadogs, I see at least a 6% or a 10% improvement needed from a revenue per headcount basis. Now, that could come in Snowflake letting people go, or Snowflake increasing the revenue, but the revenue is already increasing at a pretty good clip. So there's some questions to be answered by Snowflake. Um, on the topic of, so we'll skip the retention rate and go to quarterly share dilution. I like to look at this because I want to know, do you have too many shares printed, and are you continuing to do that on a quarterly basis? And I see stock-based compensation expense as a leading indicator for those things, because it's 30% of their operating expense. Although on a per if I compare them to their peer, Snowflake's probably not the worst. Datadog is pretty bad at. They're basically saying every quarter they have a 3% dilution happening on the share front. So that's how much erosion and value on the total net present value basis is going to be eroded, because the denominator is growing by 3% every quarter. So at the end of the year, the number is pretty very different to how it was to what it was in the first quarter. Snowflake is not the worst. But it's third in the category. I mean, forget CRM again because they're the outliers. Third in the category. So that I think the highlight for Snowflake is the retention rates, and this is mentioned in their quarterly earnings report. You want to retain your customers and their customers' revenue 100% and much higher than that, because you want not only to keep your existing customers and you want to add more, but every quarter compared to the prior year, or the prior quarter, you want to grow the customers pool as well. And that's why in those cases the retention rates are higher than 100%. Snowflake is 128%. The benchmark's lower, so that's a highlight for Snowflake. That's on the financial front and the income statement front. Actually, just on the income statement front, let's just quickly look at their balance sheet and go into statistics. So, on the statistics front, they're very liquid. Their current ratio, which is their cash that could be used to pay their short term liabilities, is very much in favor of cash. They're relatively low or no debt at all. Debt versus equity is very low, so very strong on the balance sheet front. Those are the gaps I see on the income statement front. And let's look at the SWOT analysis in a bit. Okay, so from a SWOT analysis perspective, I definitely see them as a market leader. I mentioned it before. They're 20% market share. They're the only, also number one and number three for me go hand in hand, a little bit, because they're the only pure play data warehouse company. Databricks is not public, so there's a specific type of investors that have access to private companies, not the mostly everybody has access to public companies. As long as you have some money, you can trade on companies, um, or sometimes with no money. Cortex, they basically gone in. So let me explain this a little bit. So they have a a lot of companies, software companies especially, are going deeper and deeper into AI applications. So they have this product called the Cortex AI. It's mentioned on their website as Cortex AI. So if you go into Snowflake and if you go into products or platform, I think, yeah, if you go into platform and you go into Cortex AI new, they're basically consuming LLM models, or large language models, to then put out, in one use case is put out generative AI solutions for their end users. So instead of me knowing how to code SQL, I don't need to do that anymore. You can actually watch a video on their website. It's pretty cool. You key in the question. That's like a question you ask Google, or like ChatGPT. Everyone's used ChatGPT, and it gives you the data. So that's pretty cool. And they're using this the Meta Llama and Mistral LLM models. And why I like that is because there's a whole lot of talk about cost effectiveness, and Snowflake has been low on the gross margin side. So this is particularly good for Snowflake, in that they're using Mistral here, which is this is quality and then price. And so the green, and I think you see the green shaded area there. That's the sweet spot. So they have Mistral and they have Llama is not is low on the quality, but is also very low on the price. Um, they're using those models versus their competitors. So Databricks is using GPT-4, and they're using something else which is a little bit more expensive. Like, Databricks is not public, so we're not going to talk about that too much. But that's why I like. I think that is actually a strength. The customer and top line good. We look at the retention rate and the revenue number, solid. Usage model. So I'm paying AWS and Azure on a usage basis, and I'm charging my customers on a usage basis. So I have less. I have more control of my margins, given the all things said, though, they do need to focus on growing their margins. They have a specific free cash flow generation and focus. Now they're doing it through. Now one thing that they're definitely doing on the employee and the executive side is they're really pumping out that stock based compensation expense. But they also have, what that also does is that protects their cash, because stock based compensation expense is not is a non cash item. um, so that's the strengths for me. On the weakness front, they're definitely, the stock-based compensation. We've spoken about that already. The headcount and ramp is too much. They need to cut down on that, or need to grow the revenue by a lot. The retention rate is slightly declining, so it's not like they. I think their investor relations slide deck says that it's steadily gone to 128%. So we want to see that that's getting leveled off and picks up from over here. I see opportunity in growing their margins, growing the retention rate, and I see direct competition with Databricks. If I go into Databricks, there is really not that much differentiation between that Snowflake has that Databricks does not offer. But Databricks is not public, and therefore that's the uh, the missing part there for Databricks. Um, that's just another slide that just talks about essentially ease of adoption and capability, but essentially just reinforces the point that, on the earlier slide, that what's the models that the LLM models that Snowflake's using are cheaper, and if they're being served, and if they have good reviews and so on and so forth, then that's a good thing for Snowflake to protect their margins. Now, in terms of what's been going around in the company, so if I look at their, um, I usually like to go into their news. So if I go into newsroom, and I look at what is happening, so if I want to look at June onwards, so because that's when they release results. So this is a good one. Snowflake and NVIDIA power customized AI applications. So we spoke about AI applications. They've done that. I think that at some point they also released Cortex AI. So that is not or here is in model family in Cortex AI, and ML. So those are two really good things, two really strong things in their favor. So some good traction, some good activity that's happened over the last quarter that should influence their results. Now let's just look at their technical indicators. So if I just get rid of this, Snowflake's has had a wild ride. So if I look at their 5 year profile, they went public in September of 2020. They went public through direct listing, in that they didn't hire an investment banker to underwrite their shares, and um, they reached all time high, I think, shortly after, and they almost reached all time high again at 400 plus a share. They had a little bit of a rally early on in the year when they reached $237. And I think post there are a couple of things. I think the Frank Slootman retiring caused the stock price to drop. There was a couple other things on their own forecast and outlook standpoint that caused the stock to drop. And then last earnings, we saw the stock go up, and then there was a sell off after that also. Um, and recently, so very recently, since this month, I see there's the Fibonacci says that the 78.6% threshold is being breached, and therefore the stock's in buy zone. So in a technical indicator standpoint, I definitely give it a little bit of a thumbs up. So let's just look at the money score at this point. Industry leader, I gave it a 4. Net strengths and opportunities, I gave it a 3. You can see this in this little image over here, that there's probably strengths over, I guess, overshadow the strengths and the opportunities, overshadow weaknesses and threats in number, but also it's a it's a company that's not differentiated enough, like an Nvidia versus an AMD or a Broadcom or others. So for that reason, I gave it a three. Fundamental value, I assessed Snowflake's price on a 178, 176.9 based on my forecasts, and therefore I'm saying that it's a three. So it's almost it's about 75%. The current stock price is 131. 131 divided by 176 is about 75%. So we're already at 175% of their fair value. Technical strength is good for analyst estimates. They've actually had a downgrade recently. So if I go into Snowflake and I look at analysis, I'll see that there was a downgrade in this section over here. I think fairly recently, upgrades and downgrades, and there's a downgrade over there. So for that reason, I gave it a one for a money score of 15, rating of 64, still around the hold, very similar to Pan W as we saw. And you saw Pan W was went up and then down. Investors were really not moved by that, by the earnings, even when the call towards the end of the call. And then there was a lot of buying activity in the day. So it opened strong, and then the rally basically carried through. So I guess I hope I'm right on this one as well. It'll be a good one to sit out and watch what happens in the earnings. It's on Monday after close, so good luck with it. And if you guys like this video and this content, give it a like, share, and subscribe. And I'll see you guys in following videos. Stay cool.